Welcome to the big show. It's the Retire Young radio show. If you're a first-time listener, thanks for stopping by. I am your host, Joshua David, and we are always happy to have you with us today. Once again, as always, I have my great friend on the program here today, and I can't say anything bad about this guy, only good things, Mr. Al Connickson. Al, how the heck are you doing?
Go ahead and start saying good things. No, I'm doing really well, Josh. How about you?
I'm doing really good. It's always great to be back, helping our Retire Young family make better investing decisions. I want to start off today with a little story. And, if you think back of anything you've tried in the past or started off something brand new for the first time, you may have been scared to start because it was just a little bit different. And you decided to jump in head first and learned whatever that thing you were doing. And that's what today is for. Is we're going to help people become financially literate, because the financial markets is one of those things where it's one of those things where it's hard to understand. And if you have more literacy and more financial literacy and just understanding more, you can hopefully you can make better decisions in your accounts, whether you're trading and investing for income or retirement. And Al, we have a huge show today. I want to get into a lot of different topics. I want to talk about, the market conditions. I want you to cover that real quick. But we're going to get into these other asset classes. Most people know the stock market. We're going to talk about futures, Forex, options, and retirement strategies. But most of all, how people become confident in their investing decisions. So, Al, let's recap what's happening this week. Another phenomenal week. I can't say anything bad about this market. We're seeing a lot of movement, which is what you want as a trader or investor.
Right. I guess the key word is volatility. We've seen this volatility came roaring back a while ago. It's still here, and it's causing these big moves on a daily basis, daily, weekly, intraday. I think we're going to continue to see that for some time, because we've got a lot of issues going on. The coronavirus issues, with China, with North Korea, with what's going to happen with the economy as we're reopening, and the consumer, because 70% of the GDP of activity is from consumer spending. So we've got to keep an eye on that. But I guess one thing that has come out of this is that a lot of lessons have been learned. Number one, the market doesn't just go up. People are, I think, well aware of that now. It goes multiple directions. And then also, you cannot just look at what's happening, look at what the news is, what the so-called pros are saying, that those are their opinions. You can't predict what's going to happen. This market is just, it fluctuates too much. One day, a news event will cause the market to go up substantially. The next day, with nothing changed, maybe the same news reiterated, the market goes down. So instead of trying to predict what's happening, learn how to increase the probabilities of being successful when you trade.
That's what it's all about, Al, is those probabilities. And so many people are trying to predict what's going to happen.
Right.
And you have to put the odds in your favor for those probabilities to work.
Correct. Yeah, and that's really what it is. This is should be a probability business, not a prediction business. And the way that you increase the probabilities is to try to do what the people that are successful are doing. If you look at who is successful on a consistent basis, regardless of what's happening in the market, it's not the individual trader for the most part. It's institutions. It's companies like Goldman Sachs, J.P. Morgan, Merrill Lynch, people maybe like Warren Buffett, although he has his down days also. Yeah. But those are the people that are successful on a consistent basis. So the question has to be, why are they so successful?
Yeah, why is there such a big gap there?
Right. Well, there's a number of things. Number one, they know how to protect what they have. Risk management is huge, and that should be the number one thing that anyone learns if you're going to be a trader or an investor.
Well, isn't that typical thing you just buy and hope it goes up? That's what most people do.
Well, and that's part of the problem. That has been ingrained in people, that you don't really need to worry about drawdowns, don't worry about corrections or crashes, because the market will always come back. And you know what? It does, and it always will. It always has, it always will. But the problem is that if you let your portfolio take a hit, then there's a wasted amount of time there just to kind of fight out of that hole to get back to where a portfolio was before any profit can be made. So the key is to understand how the market functions. Why do prices change? Why do they go up? Why do they go down? What starts a trend? What stops a trend? What determines how far a trend is going to go? it really can be simple. It's institutional activity. It's institutional buying and selling that impact that one thing that is a fact that can't be argued, and that's the relationship between supply and demand. It's buyers and sellers in the financial markets.
Well, that just comes down to being educated. You mentioned there's a huge gap. I mean, the institutions, they've just been educated. The public, the masses, they haven't been educated on it.
And nobody is born with the knowledge and the skills to do this. The guys that are trading for these big firms, they weren't born with that knowledge. They learned it. It was an education process. And that's what I think everybody needs to understand is that you can't just decide, I'm going to open. You can just open an account. You can throw money at the market. And that's a good thing and a bad thing. I mean, it's a good thing that it's accessible by everybody or to everybody, but it's a bad thing because it's accessible to people that don't know what they're doing. So the institutions, number one, they know how to protect their assets. They know how to do risk management. You could think about it in any trade. The two primary ways that it can turn out is either a win or a loss. And both of those need to be managed. The wins need to be managed. The losses need to be managed. And the other thing that institutions do is they know how to make money in all different market directions. So I think a good thing for a trader or investor to ask before they really get involved in these markets is, how do I profit in a down market? The institutions are doing it. Our students know how to do it because it's one of the primary things that we teach.
That's the big thing. You mentioned all directions. Markets they go up, they go down, they also go sideways. So it's so important to have a strategy for every single condition. And Al, it's the beginning of the show, and we have a lot of listeners that want to close that gap of education and financial literacy from the institutions to the public. Thanks for listening. Don't forget to check out the website at retireyoungaudio.com and leave us a comment.